Hello, welcome to the weekly technical analysis review here at xm.com. I'm Rafi Barajan, currency analyst, and today is Monday, June the 11th, 2018. The pairs we're going to be looking at for this week are the dollar yen, the euro dollar, and the pound dollar pairs. Then we're going to start first with a dollar yen. We can see that the pair is looking rather bullish in the short term. Prices are sharply up from Friday, and we can see the RSI is pointing upwards. We would need to see, though, a break above that key resistance level around the 110 handle in order to strengthen the upside momentum. So the 110 handle is the 61.8% Fibonacci retracement of the down leg from 113.38 to 104.62, and is also where the 200-day moving average has currently flatlined. So that's an important barrier to break. Above that, we would need to see prices challenging that May peak of 111.39 in order to see a resumption of the medium-term uptrend that began back in March, and then that would also point to a more convincing bullish picture in the medium term. To the downside, we do have immediate support coming from the 109 handle. Just below that, we've got the 50-day moving average. So a breach of that key support area there would signal a shift to a more bearish picture in the short term. And then below that, we've got the 108 handle as the next key support to watch out for. Let's now turn to euro dollar. We can see there is a decent upside correction going on there following that 10-month low of 1.1509 from back in at the end of May. So the euro dollar pair, the uptrend halted at 1.1839. That's just below the 38.2% Fibonacci retracement of the downleg from 1.2413 to 1.1509. We would need to see prices successfully breaking above that resistance area in order to strengthen the upside momentum, and then we could then see euro dollar heading towards the 50% Fibonacci retracement at around 1.1960. Not too far above that, we've got the 50-day moving average at around 1.1985. We did, of course, see that bearish crossover of the 50 and the 200-day moving averages in late May. If prices continue to correct upwards, we could see that bearish crossover reversing, with the 50-day moving average going back up above the 200-day moving average, but we could see a struggle there. So just below the 1.20 area, between 1.1960 and 1.20 levels, that could potentially be a difficult obstacle for euro dollar to break, especially as it doesn't seem to have much momentum either way at the moment. To the downside, we're likely to see the immediate support coming from 1.1720. That's the 23.6% Fibonacci retracement. Below that, if prices do break that support, we would see that 10-month low 1.1509 coming back into view, and then a breach of that level would open the way towards the 1.14 handle as the next key support level. Our final pair for today is pound dollar. It is looking bearish for the pair in the short term. Prices are sharply down from Friday. RSI is also pointing downwards in negative territory. We saw prices falling below that key support area around 1.3365. If prices do close below that level, we could then see pound dollar heading towards the 1.33 handle. So that had been an important support area in the past, and a breach of the 1.33 level would take prices back towards that 6-month low 1.3203 we saw back in May. And then below that important support level, we have 1.3110 as the next target for the pair. To the upside, though, if we do see prices managing to recover and head back up again, the immediate resistance level to watch is 1.3475. That's the 23.6% Fibonacci retracement of the downleg from 1.4376 to 1.3203. Prices did come to hold at 1.3471 at last week before retreating again. A break above that level would help the pair strengthen the upside momentum, and then we could see the prices targeting the 200-day moving average around 1.36. Above that, we've got the 38.2% Fibonacci retracement at around 1.3645. But we will really need to see pound dollar reclaiming the 50-day moving average currently at 1.3688 in order to see the medium-term picture turning bullish again. At the moment, the medium-term picture is looking rather neutral with the risks to the downside. That's it for me. Thank you very much for watching and have a great day.